So the story everyone's talking about this morning is the sorry tale of Bats. Failed initial public offering on Friday. Looks pretty bad. Not only is it bad enough when a company fails to launch its own stock on the market, but when you're an exchange, Agnes, that's even worse, isn't it?
Yeah, exactly. I mean, again, there was like these knock-on effects. They had a halt trading of Apple stock on Friday, and I mean, I think more than anything, it's just incredibly embarrassing for an exchange, right?
Yeah.
I mean, and I think it's also maybe a lesson if you're going to do your first IPO offering on your exchange, don't make it your own.
No, exactly. Although, I mean, what they wanted to do, I think, was to tell everyone, look, we can do this. They'd already done a very good trade in getting stocks listed there, right? They've got 11% of the market.
Yeah.
They'd already listed some ETFs. They thought this is the next step. Look, we're the next big exchange, New York Stock Exchange, NASDAQ. You can fight amongst yourselves, but we're going to go for this, and then flop.
Yeah, and I mean, again, I think right now they're going to be on damage control, and I would imagine that they're probably going to hold off their IPO until people maybe forget about this.
Yeah, which will be hard. But of course, Joe Ratterman, the CEO, isn't talking about it, whereas the former founder and CEO, Dave Cummings, is pushing for it, right?
Right, exactly. But I think even what's also kind of important and kind of like the silver lining of all this is it also kind of shows that the flash crash that we had back in 2010, and there was all this hand-wringing about how we're going to make the market safer. I mean, it seems that some of the actions have actually worked, right? I mean, we had the single stock circuit breaker that kicked in. So I mean, that's the silver lining on all this. No,
I think you're right. I mean, Apple, obviously a very big name, went down 9% because of a couple of faulty trades through Bats. But there are so many different venues that you can go to. The traders, I mean, again, with 11% of the market, you'd think traders would see Apple go down, they'd see the IPO fail, and they just abandon everything. But it stuck to Apple.
Yeah, exactly.
Apple got back up and running within a few minutes, and
the markets. I mean,
fine.
People were not talking about the broader markets and this having an impact on the broader markets. Where again, you contrast that with the flash crash, and I mean, everybody was talking about the broader markets and kind of the panic that that it caused. So I mean, I think that's something good, and we're going to be getting regulations later this year that actually would have prevented even halting the Apple. I mean, would have prevented Apple having to halt its trading, and would have just kind of netted out those trades as erroneous trades. So I mean, that's something.
And what do we think for Bats? I mean, it's a bit early to tell. I mean, their reaction seems to have been, given what happened, pretty good.
Yeah, I mean, I mean, they're out there talking about it. They sent a letter to customers. They had a fact sheet of like what went wrong. I mean, I think this is, in terms of damage control, it seems like exactly
it's a pretty good and acceptable mea culpa. But what it means for them in the future, I mean, it's pretty embarrassing. And they're being not investigated, but they're one of the focal points for an investigation into high-frequency trading, wherever that goes. But they've got these two big issues going on.
Well, the memory on Wall Street is pretty short. So I would just say, I wouldn't count them out yet.
Yeah, and it's not as if they're the only exchange to make a mistake. And let's look at what's happened with the other exchanges. Failed mergers, volumes going down. They're all trading at pretty low levels. So it's not as if they're the only one.
Yeah, that's right.
Well, thanks, Agnes. We'll keep our eye on that and come back to us tomorrow for more breaking views.